Picture this, one stock, Occidental Petroleum OXY. Its price has been slashed by 30% from its peak. After falling for 2 straight years, does this prove the investing legends got it all wrong? Or is Mr. Market handing you a golden opportunity? But what if I told you that during this exact same period, masters of the game like Warren Buffett and his allies Li Lu and Duan Yongping have been doing the exact opposite? They've been buying the dip consistently. Hearing that, are you feeling more excited or more nervous? So that brings us to the one core question tonight. Is this a once-in-a-lifetime chance to follow the greats and buy when there's blood in the streets? Or is it the perfect trap set by Mr. Market, ready to ensnare everyone, even the legends themselves? Tonight, we're here to solve this puzzle. Welcome to the debate. We have one mission: to cut through the noise, challenge the conventional wisdom, and help you make a smarter, more informed decision. We believe the deeper the debate, the clearer the path. Let's get started.
Ladies and gentlemen, thank you for joining us today. I stand before you to make the case that Occidental Petroleum, ticker OXY, is a compelling buy opportunity for investors in 2025. Let's keep it straightforward. Occidental Petroleum is one of America's largest oil and gas producers. Their main business is pumping oil and natural gas, mostly from Texas's famous Permian Basin. They also own a chemical division called OxyChem, making basic materials for everyday products, and they run big midstream operations, basically pipelines, and processing that support steady cash flow. So, why should you consider buying Oxy? First, Warren Buffett's endorsement. Berkshire Hathaway owns 28% of Oxy, over $10 billion worth. Buffett has called their CEO an extraordinary manager and made it clear Berkshire is invested for the long haul. If the world's most respected investor believes in Oxy, that should speak volumes. Second, Oxy dominates the Permian Basin, America's top oil region. Their wells are so efficient they pump nearly twice as much oil per day as most competitors, and thanks to a big recent acquisition, they have many years of low-cost production lined up. With costs under $40 per barrel, they're set up for profits even in tougher times. That's a huge advantage in an industry where many competitors need oil prices above $60 just to justify drilling new wells. Now for Oxy's game-changing secret weapon. While others just talk about cleaner energy, Oxy is actually building the tools for it. They're creating the world's largest carbon vacuum cleaner, a facility called Stratos that literally sucks CO2 out of the air. But here's the truly clever part. They don't just bury the CO2. Instead, they inject that CO2 into their existing oil wells. Think of it like squeezing the last bit of water from a sponge. This helps push out more oil that would otherwise stay trapped underground. So, Oxy produces more energy, more efficiently, all while helping clean the atmosphere. It's a real-world example of being both green and profitable. In short, dominant production, innovative tech, and Warren Buffett's backing make Oxy a smart buy for the future.
Ladies and gentlemen, and thank you to my opponent for their opening remarks. I'm here today to argue the no side of this question, and I want to give you 3 very simple reasons why I believe Occidental Petroleum is actually a very risky bet right now. Not the bargain it might seem. First, let's talk about their earnings. They're all over the place. We're talking about a company whose net income plummeted, and I mean plummeted, from over $12 billion in 2022 down to just $2.4 billion in 2024. That's an 80% collapse. It just screams instability. And it's not just a one-off. Their revenue is also drifting lower. It slipped 5% last year, even when oil prices were pretty decent. So, when your profits are swinging around like that, you just can't count on it as a long-term investor. It's impossible to plan. My second point is the debt. And this is a big one. Management just took on another $9 billion in new debt to buy Crown Rock. This pushes their total debt to nearly $25 billion. That's a 35% jump in just 1 year. And what does that mean? It means they have less and less room for error. Their ability to cover their interest payments has been cut in half from where it was just a couple of years ago. In today's high interest rate environment, that's a real red flag. And finally, my third point. What do you get for taking on all this risk? The rewards are weak. Let's start with the dividend. You get a tiny 2.1% yield. That's about half of what their competitors offer. And let's not forget, this is the same company that slashed its dividend by 90% back in 2020, the last time things got tough. That doesn't exactly build confidence, does it? Then there's the oil price risk. They are completely exposed. Oxy themselves admit they have that's right, zero hedges in place. So every single time the price of oil drops by just $1, that's another $65 million gone from their cash flow. They are riding the waves with no life raft. Now, my opponent mentioned their secret weapon, this carbon capture technology. Let's be clear, this is a huge speculative bet. It's unproven technology that relies almost entirely on government subsidies to even have a chance of working financially. It's not a secret weapon, it's a science project funded by shareholders. So, let's recap. You have massive debt, you have roller coaster earnings, you have a tiny dividend with a bad history, and you have a very speculative bet on unproven tech. Ladies and gentlemen, that does not add up to a smart investment. If you're looking for stability and real value, there are much safer, much stronger companies out there. Oxy is a gamble, not a buy. Thank you.
Thank you. My opponent has painted a picture of risk and instability, focusing on cherry-picked numbers from the past. Let's talk about the reality of what Oxy is doing right now. First, he points to swinging net income. In the energy sector, that's normal, but smart investors look at what truly matters: cash flow. Oxy generated a massive $6.1 billion in free cash flow last year, and another $1.2 billion just in the first quarter of this year. Now, what did they do with that cash? They attacked their debt. My opponent is worried about the debt from the Crown Rock acquisition. But he failed to mention they've already paid down nearly $7 billion of it in less than a year. They've paid off all their 2025 debt maturities ahead of schedule. This isn't a company drowning in debt, it's a company actively and successfully managing it, and the credit agencies agree. Fitch just upgraded their outlook to positive. Next, he calls the rewards weak. A 2% yield? That ignores the full story. That dividend has grown for 4 consecutive years, including a 22% hike just last year. This is a company returning more and more cash to shareholders. And if you're still not convinced, ask yourself why Warren Buffett's Berkshire Hathaway keeps buying more shares, now owning 28% of the company. They see long-term value, not just a snapshot of the current yield. Finally, my opponent dismissed the carbon capture strategy as a science project. Well, a science project doesn't have the world's largest tech companies signing multi-million-dollar deals with it. Microsoft just signed the largest ever deal for carbon removal credits from Oxy's Stratos plant. This isn't a speculative bet. It's a calculated, industry-leading move into the future of energy, turning a cost carbon into a profitable new revenue stream. So let's be clear. The story here isn't one of risk. It's a story of powerful cash flow, aggressive debt reduction, and a validated profitable path into the future. Oxy is not a gamble. It is a disciplined cash machine with a built-in world-leading growth engine. Thank you.
Thanks again, everyone, and to my opponent for that optimistic take. But let's cut through the hype and look at the real numbers, because facts matter when your money's on the line. First off, sure, Oxy's big in the Permian Basin, that's true. But let's talk about the elephant in the room, the downside of volatile oil prices. Oxy's entire business hinges on oil staying high, but prices are unpredictable and often crash due to global events like oversupply from OPEC or slowing demand from economic slowdowns. Right now, WTI crude is hovering around $60 to $80 per barrel, but analysts predict it could dip below $60 in 2025 if recessions hit or electric vehicles reduce demand further. Oxy has zero hedges in place, meaning no protection against drops. We saw this in 2020 when prices tanked below $40, and Oxy racked up a $14.8 billion loss, forcing massive cuts. Dominance in Permian doesn't shield them, it just amplifies the pain when prices swing low, turning profits into losses overnight. Now, about that game-changing carbon capture tech, Stratos. Sounds cool, right? But here's the reality. Oxy's poured over $1 billion into this, and it's still years from being profitable. Experts say direct air capture costs $600 to $1,000 per ton of CO2 removed right now, way too high to compete without massive government handouts. And those subsidies? They're not guaranteed. Policy changes could kill it overnight. Plus, Oxy's own filings admit this is a high-risk bet with no clear payback timeline. It's more gamble than genius. And Warren Buffett's backing? Yeah, Berkshire owns a chunk, but even they've been quiet lately. Oxy stock is down 15% this year, while the S&P 500 is up 10%. Buffett buys value, but XOY is trading at a premium 18 times earnings versus a peer average of around 14 times. That's not a bargain. It's overpriced for the risks. Folks, this isn't a smart buy. It's a high-stakes roller coaster. Stick with stabler energy plays that actually deliver consistent returns. Thanks.
Ladies and gentlemen, thank you. We've heard a lot of debate today, and it all boils down to a very simple choice. Are you going to invest based on the fears of the past, or on the clear, profitable reality of today and tomorrow? My opponent wants you to worry about old debt and past dividend cuts. But I've shown you the facts. Oxy is a cash flow machine right now, paying down that debt at a stunning pace and raising its dividend for 4 straight years. The risk my opponent sees is already in the rearview mirror. He calls their future strategy a science project. But real science projects don't get the world's largest ever carbon capture contract from Microsoft. Real science projects don't get a $12 billion stamp of approval from Warren Buffett, who continues to buy more shares. So, the choice is yours. You can focus on the temporary storms that every energy company faces. Or you can invest alongside the world's greatest investor in a company that dominates its industry, has a proven low-cost advantage, and is building a profitable, world-leading business for the future. The evidence is clear. The momentum is undeniable. Oxy is a buy. Thank you.
Thanks, folks, for sticking with us. My opponent makes Oxy sound like a sure winner, but let's wrap this up with the simple truth. It's just too risky for your hard-earned money. Remember, their earnings swing wildly. Profits crashed 80% in 2 years, and without oil hedges, any price drop below $60 wipes out cash flow fast. Debt's ballooned to $25 billion from that Crown Rock buy, making every interest payment a squeeze. Dividends? Tiny at 2.1% with a history of 90% cuts when times get tough. And that carbon capture bet? It's a billion-dollar gamble on unproven tech that needs government cash to survive, not a safe play. Bottom line, Oxy's a roller coaster of debt, volatility, and hype. For real stability and value, look elsewhere in energy. Don't gamble, invest smart. Thanks.
All right, over to you, the judges. What do you all think? I'm looking forward to seeing your votes and thoughts in the comments section. We love hearing what you have to say, and I believe every perspective brings something valuable to the table. Also, I've done my best to fact-check the information you've just heard, and you can find the relevant links in the description box below. Before you go, don't forget to hit that like button and subscribe. Your support means the world to us. We'll see you next time. Bye-bye!